Hello and welcome to another Switzer update. And today is the day before the big decision by the Reserve Bank tomorrow about an interest rate rise. Will it be 0.25%, which the majority of economists think? Could it be 0.5%? A minority of economists think that's a possibility, particularly after that big inflation number for the December quarter. And the CBA is saying possibly a 0.4% increase. Either way, it's a really difficult decision for the Reserve Bank because they're not quite sure how the previous interest rate rises is actually affecting the economy. Now, the important consideration is in the middle of this year, 800,000 mortgagees will be facing a big step up in their home loan repayments. Someone on a $500,000 home loan is going to be paying $1,200 a month more, which is about $14,400 a year. And if they've got $1 million home loan, that's going to be nearly $30,000 a year. Now, that's going to have a big impact on spending, big impact on bringing inflation down. So the RBA has to juggle whether they have to move early or believe that what they've done so far will have an effect until the home loans start going from fixed to variable, and that will definitely have a big impact on spending and the inflation rate. So that's going to be really tricky for the Reserve Bank governor. I'm hoping he goes for 0.25% and keeps watching the data. If the data still keeps on coming strong, sure, he can give us 0.5% in the next meeting, but if the data remains on the way down in terms of its strength, then his 0.25% rise might be a lot smarter than the people who are asking him to do a shock and or increase. Let's have a look at the stock market on Friday in the US. The Dow was down 127 points, S&P 500 down 1%, Nasdaq down 1.5%. Now, what's really interesting about this is the Yanks got a really good employment report. Good in terms of creating jobs, 517,000, much more than what economists were expecting. Now that also is great for job seekers, but terrible for those hoping that inflation is on the slide. So we're not quite sure how the Federal Reserve will react to this number, and that's the part of the reason why the Aussie's gone down to 69.16 US cents. So we're going to be watching the way the market reacts this week. We've seen tech stocks really get re-loved over the last month or two. You wouldn't believe this, but the Nasdaq is actually up 16% in a month, and that is a real re-loving of tech stocks. That unemployment number or employment number will make the market probably, some smarties in the market, actually do some profit taking this week, and so we could see the market a little bit negative. It's going to be interesting to see what the Fed boss Jerome Powell says this week as a consequence of those job numbers. He has said to us that he thinks that the disinflation process, the falling of inflation in the US, is actually happening, but he could be a bit spooked by that job number. Now, let's go and look at what's happening locally. There's no really important data this week, but there are a number of companies that are going to be reporting, and this is really the ramping up of the company reporting season here in Australia. Companies like Macquarie and Transurban, they're going to report, and I think by the end of this week we'll have a rough idea how companies have experienced the economy that's been affected by the interest rate rises. And that's going to be an interesting analysis. We've seen the economic data coming from the Bureau of Statistics, but what are the companies actually feeling as a consequence of all these rate rises? So that's the week coming up. My fingers crossed that we won't see a terrible reaction in the US. A bit of a pullback would be understandable, but I do not think that there's any justification for a really big sell-off at this point in time. But what the Fed says, the Fed boss says during the week will be really important. That's the update for today. See you tomorrow.